Hey everyone, it's Leader Logic, and welcome back to the channel where we make accounting simple, practical, and, dare I say, almost enjoyable. Let's be honest, no one wants to spend more time on accounting than necessary. Whether you're a business owner, a freelancer, or just someone trying to keep your personal finances in order, the last thing you want is to get bogged down by confusing numbers and endless paperwork. Even small bookkeeping mistakes can turn into big headaches, wasted time, audits, and lost money. A single error in your journal entries can snowball into bigger issues, making tax season or financial reviews a nightmare. Today I'll break down the most common journal entry mistakes, even pros make them, and how to avoid them. We'll look at real-world examples and practical tips you can use right away, so you don't fall into the same traps. Whether you're new to accounting or a seasoned business owner, knowing these pitfalls will save you time, money, and a lot of stress. You'll be able to spot errors before they become problems and keep your financial records in top shape. We'll show you why each mistake matters, how it can impact your business, and most importantly, how to keep your books clean and accurate. With a few simple habits, you can avoid costly errors and feel confident in your numbers. So hit subscribe, join our community of smart business owners and finance enthusiasts, and let's dive in to make accounting work for you. First up, let's talk about one of the most common pitfalls in bookkeeping: mixing up debits and credits. It might seem like a simple concept, but it's surprisingly easy to get wrong, especially when you're juggling multiple tasks or working under pressure. Even seasoned bookkeepers and accountants can make this mistake, particularly when they're tired, distracted, or rushing to meet a deadline. One small error can lead to hours of extra work trying to track down what went wrong. Here's a quick refresher. Expenses and assets increase with a debit and decrease with a credit. Liabilities and income, on the other hand, increase with a credit and decrease with a debit. Keeping this straight is crucial for accurate records. For example, if you buy a new computer for your business, that's considered an asset. You should debit the asset account to show the increase, not credit it. This simple step helps keep your books balanced. Mixing up debits and credits can throw off your entire balance sheet and make reconciliation a nightmare. So, always double-check your entries before you post them. Your future self will thank you. Next, let's talk about something that often gets overlooked but is absolutely crucial: narration in your accounting records. By narration, I mean those short descriptions you add to your journal entries, explaining what each transaction is really about. Skipping this step might seem harmless at first, but it can quickly turn an audit or financial review into a complete nightmare for everyone involved. Imagine trying to explain a mysterious expense from months ago, with no context or details to jog your memory. You're left scrambling, searching through emails and receipts, just to figure out what happened. But if you'd simply added a note like "Facebook ad campaign, approved by manager," you'd instantly know what the transaction was for, saving yourself and your team hours of unnecessary stress and confusion. Good narration isn't just for you. It helps your colleagues, your team, and even external auditors quickly understand every transaction, making collaboration and compliance so much easier. It's a small effort that pays off in a big way. So don't skip narration. Your future self will thank you. Another common mistake: posting to the wrong account. With similar account names and busy days, it's easy to misclick. For example, recording a customer payment as sales revenue instead of accounts receivable can overstate your income. This distorts your financial statements and misleads your business decisions. Always double-check the account before posting. Accuracy here is key. The biggest mistake? Not reviewing your entries. Even the best bookkeepers need to double-check their work. Review ensures your debits and credits match, dates are correct, and narration is clear. Catching errors early saves you from bigger problems later. A quick review is always worth it. That's it, the most common journal entry mistakes and how to avoid them. Mastering these basics streamlines your accounting and gives you peace of mind. Confident numbers mean you can focus on growing your business and reaching your goals. If this helped, like, share, and subscribe for more accounting tips. Thanks for watching. See you next time.